Hi there, and welcome back to your Daily Market Podcast. My name is Maryklaire Pelk, and I am the Director of Operations for the GCU Finance and Economics Club. I'm here with Charlie Hurst and our special guest, Josiah Schwein. Why don't you go ahead and give us a quick introduction, guys?
Yeah, I'm Charlie Hurst. I am also a Director of Operations here at GCU, and I'm a freshman here.
I'm Josiah Schwein. I'm a freshman at GCU, and I am studying finance economics, and I am the Director of Marketing for the club.
Great. Today, as per usual, we're going to go over the numbers and anything happening in our global picture as for right now. And we're also going to be talking about some helpful financial habits that can help you build wealth, specifically for college students or people in their 20s. So starting off, it looks like we ended the markets in the green today for most of the things we watch. The S&P was up 0.11%. The Dow was down 0.13%, but NASDAQ was up 0.18%, and oil prices were up 0.47%. So overall, we have quite a few factors that led to the changes that we saw in the market today. One of the big ones was that we had an important address from President Trump last night that seemed to have a bit of impact on the markets right when they opened. What does this reaction tell us about what investors are worried about, and how did this play out this morning?
Yeah, Trump had a speech last night, and he was talking about kind of the war in Iran right now. He talked about how we are starting to kind of go into that, and he didn't give us a clear deadline or a clear date. He just said we are seeing growth in the war in Iran, which is going to affect those oil prices and kind of how scared people are, in the stock market. So
yeah. So what are those fears that you're talking about? What is that?
So some of those fears are going to be people just uncertainty. So you could see the price of food increase because, oil's increasing. It kind of just goes down that line. People are putting oil in their cars. Gas prices are going up. People are scared.
Mm-hmm.
Yeah, I think the important thing you touched on there is the uncertainty. After that, we did see all the airlines stocks today.
Mm-hmm.
They were down. I know United Airlines was down 2%. That's the one I watch. And I was looking at American Airlines. It was also down today. So you did bring up gas prices, and airlines are directly affected by that as well.
Airline tickets as well.
Yep,
The
exactly.
price of gas to fly the airplanes too. So looking forwards, we also have the U.S. jobs report being released tomorrow. This is a very crucial piece of information that drives the market. Can you tell our viewers a little bit about what that means and how it might impact?
Yeah, so the jobs report, it gives an overall update on the job market. So how many people are unemployed, how many jobs were created in a certain month, because it is a monthly report by the U.S. Bureau of Labor Statistics. And basically, if the jobs report is good, then obviously there's more jobs created, and that's good for the economy.
Yeah.
If it's low and under what was expected, then it is bad, and it shows that there's not as many jobs being created. So especially with AI, the jobs report is something to watch over the next 5 to 10 years because it's really interesting. If we see a decline over these 5 to 10 years, then we'll see, okay, AI does have an impact on the job market.
Mm-hmm. Obviously, this is personal opinion, but do you guys have any thoughts about where it might go or predictions for it?
For the jobs report, I can't really say. I don't really pay attention to that number as much as I should be, but I think the key thing to pay attention to is if it's on a slow decline, because then we do see, obviously, the AI take over.
Yeah, I think over time, you're definitely going to see AI to start taking over some of these jobs, and you're going to see that number decrease. But right now, as in tomorrow, I don't have a expected number to say.
So talking about how AI might impact jobs in bringing that over to the tech sector and AI stocks and stuff like that, do you think that that would be a positive thing in that realm of things, or would that not impact it too much?
Yeah, for the overall company, I think it's very positive because they're going to be saving money on some of these jobs that they have to pay people for. But for the average U.S. citizen, it's obviously a negative because then it's going to be much more competitive field for these tech sectors, especially. We're seeing it with everything. Everything can be taken over by AI. I mean, the one that comes to mind is maybe something like accounting, where you can just upload a snippet to ChatGPT and it just tells you, okay, this is how to do this accounting format. And yes, it can be used as a tool, and people in these jobs should be using it as a tool rather than doing it for all of their work in general, because I think that's where people can separate themselves, is if they know how to use AI and how efficient they are at using it.
Yeah.
I 100% agree with Charlie on that.
Yeah, definitely. So given all of these different volatile aspects of our market at the moment, would you describe it as bullish, cautious, uncertain, and why would you say so?
Yeah, I think over the past couple podcasts we've done, we just keep talking about uncertainty and volatility. And I think we're still in that uncertain period, and I don't think that's going to change for probably the next 6 months to a year.
Mm-hmm.
Yeah, it's definitely very cautious. Like, I've been hearing from a lot of financial advisors right now that they're constantly getting their phones absolutely blown up. People saying, what about the war? What about all this stuff happening? Do I need to pull my money out? What do I need to do? And I feel like that's just the average person right now is just very cautious looking at their accounts.
Yeah, definitely. So as college students, is there any takeaways that we should gain from this in our investments or that you guys are watching?
I would say, like, at this point right now, we could almost view the market as discounted, as like if you are currently investing in the S&P 500 or whatever you're doing right now, even if you're not doing anything, it's a great opportunity to get into using some of your saved money, starting to like invest monthly. It's just a great like time to purchase some shares.
Yeah, that's a really good point.
All right, so moving on to our goal of the episode today, let's give some tips and tricks on how building wealth in your 20s is actually possible. But before we do that, I want to have you guys define real quick what wealth actually means in your 20s specifically, because obviously we aren't going to be at a place where we can retire or anything like that. But what does that mean when we talk about wealth in your 20s?
Yeah, I think wealth in your 20s isn't about your net worth. It's not about how much money I'm making. It's kind of just starting to build these like super strong habits, like investing monthly. Like taking even if you're not making that much and you only have $20 to invest in monthly, it's about building the habits to where when you do start making more money, you're actually able to, like, you have these foundations.
Yeah, going off of that, I think wealth in your 20s has to do with your assets. So I think if you're able to start investing and you have those assets, then that's something that you build up from your 20s up until your 60s, and your portfolio will grow significantly over that time. And I also think a lot of the point of wealth in your 20s is knowledge. So you can be wealthy with knowledge, and I think that's something that is really important.
Yeah, I really like that. Josiah, you were talking about habits, and with habits, you have to have a certain mindset. So is there any sort of mindset that you have or that you recommend others try to adopt when it comes to investing in finance?
I feel like a good mindset you could come from is like discipline. If you're disciplined and you stop going to Starbucks every day, spending $8 on a drink, like, and start putting that money aside for you to invest or you to save, is like a big one for you to just be able to like even realize what you're spending a lot of money on and kind of put that aside.
Yeah, and I actually just saw a recent point, like going back to that, an Instagram post by the GCU Money Mentors. They talked about, I think it was if you spend $23 every day, they would like bring up points like obviously the coffee, but if you spend $23 a day for a whole year, then it adds up to I think around $10,000. So that's something to really keep in mind.
Yeah, you have to pay attention to where your money's going and what you're missing out on if you don't start investing it. So for someone who maybe is new to investing, it can be a little bit overwhelming when we have all sorts of different options that we can put our money into. So I was wondering if you guys could touch on a little bit of what different type of investments accounts are and what you might recommend for someone starting out.
Yeah, I would say the best place to go right away is like big firms, of course, like Fidelity, Vanguard, Charles Schwab. Those are the easiest to open, like open your own account. And then inside of these accounts, you have Roth IRAs, 401ks, and then you can kind of pick and choose stocks. But inside that, your Roth and your 401k, these are your retirement plans. And these are going to be, for the Roth, it's going to be already taxed. And so when you withdraw that money, when you're about to retire, you don't have to pay taxes on any of it. Your 401k is pre-tax. So when you withdraw, it will have to be taxed. But from your employer, if you're at a company, a lot of the time they will match whatever you invest monthly into your 401k, which is like a really good opportunity just to literally get free money.
Yeah, I think an important thing too is don't just open one of these accounts, have both of them. So you can have your Roth IRA and your 401k. Depending on where you're working, obviously the 401k can be very beneficial. And obviously the Roth is the one that you start investing in early on.
Yeah. And also another thing to know is that with each of these accounts, there are certain parameters of what you can and can't invest. I believe at our age, the maximum that you can contribute per year for Roth is $7,000.
I'm pretty sure that's correct.
Yeah. So that's also something to keep in mind too for those who are just starting out with these accounts.
Mm-hmm.
Yeah, and for the 401k, I'm pretty sure it was $23,500.
Mm-hmm. So for someone just starting out now, maybe you're in the age range of 18 to 22, as most college students are. What difference does this make as when compared to someone who's maybe in their 30s or 40s?
Yeah, like there is a decade that you're missing out on opportunity for compound interest for you to just gradually. So when you invest in something like a Roth IRA, your money will earn money off of it. You'll earn maybe 7 to 11% possibly. And those will go right back into your account, and then you'll gain money off those earnings. And that 10 years is very crucial because down the line, that could turn into thousands, maybe hundreds of thousands of dollars.
Yeah. Before we wrap up, any other tips that you would give someone starting out?
Yeah, I think the most important thing is just to gain knowledge. Obviously, what we say isn't always something that you should listen to and take our advice on. And I think that's really important, as well as just reading up on like a bunch of different sources. So then you have an overall knowledge of everything, not just a biased source on something.
Yeah.
Yeah, I think that's great. I think what Charlie covered right there is fantastic.
Great. Well, thank you so much for tuning in to your Daily Market Podcast. I hope you have something to take away.